The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. As I mentioned yesterday, well, let's start out with the DAX. You can see the DAX action today went up, made a new high, had a little bit of reversal. No big deal. But as we mentioned yesterday, I wanted to talk to you a little bit about this day in history. 1989 was a Sunday, and my daughter from Berkeley, she was going to school there at California. My other daughter was at UCLA. We all got together. We went to the Beverly Hills Country Club. One of our old friends from the old Drexel days, Eddie Horowitz, was getting married. And it was really a big extravaganza, and we had a lot of old friends there. It was just like old home week, and my daughters had grew up with these kids over the years with all the bar mitzvahs and bat mitzvahs, but it was fabulous. But the whole during the wedding, they lifted everyone, and when Eddie got on the chair, he said, "Here's to the stock market. It's going to be down 300 points tomorrow," and that was October the 18th. And anyway, I always will remember that. And in fact, I'll call Eddie this morning and wish him a happy 28th wedding anniversary. Anyway, long stories behind that. You don't need to hear that. But let's talk a little bit about something that's really important right now, and that is the gold market, folks. If we take a look at this gold market over the past 6 weeks here, you'll notice that we tried to hold at the 1290 level. That was down one harmonic number. We certainly didn't do that, did we? We came down and we hit the 61% retracement early this morning. In fact, I posted it into the room when it was trading at 1280. The low was 1279. What was interesting about that 1279 number, folks, if you'll notice the low that we made yesterday, which was at around 1284.5, then we rallied back to the old breakout level of 1291. If you take that 1284, 1291 and multiply it times 1.618, that gives you the exact low today in the gold at 1279. And believe me, if you bought it at 1280, put your stop at 1278, because if it goes below 1279, it's going to probably go a lot lower. So this is one of the times where you can take a contract that is worth $128,000 and only risk $200. That's the way I'm looking at it. So it's all about risk control on this one. I'm not sure whether it's going to work or not, but this is what we're looking at. Okay, the other thing is we're going to have our good friend Norm Winsky from Astro-trend on, and Norm was in the heat of the battle on October the 19th in the CBOE there at Chicago. They're on Jackson Boulevard, and he's going to talk to us a little bit about it was really like, because people, that's 28 years ago, people just don't remember what it was really like. I mean, it was absolutely one of the most hair-raising most hair-raising time I have ever seen in all the years I've been in this business, and this is 6 decades now. Anyway, we'll let Norm talk to us about it. He's got some great information for us. So we'll had several questions about the euro. The euro is still in play, folks. We're looking to buy that at the 117. 46 level. We did get down to 117.30. That was 16 pips. We use a 30 pip stop on the euro, as most of you know, and so that's still in play. We're trading a little bit higher than that, but again, the gold and the silver are running to the euro. Makes a new low now below 117.30. I would assume it would be wrong, so I would raise my stop on that to 117.29, and that way you're only risking 19 pips, which is just right around $200, which isn't too bad. And we'll see if that is going to be the case. We'll have to wait and see if in fact that's going to mean anything or not. I don't know. The market keeps going higher. All I know is, folks, Tom O'Brien yesterday at the end of the day, he was saying that all the stores are open, but nobody's buying on the lack of volatility here in the market, folks. And that's what's happening in the NASDAQ and some of these others. You just don't have the interest in this breakout and all this market that's going. I know it keeps going up, but it's doing it without any open interest. And remember, these are very small markets, these future markets in the stock market. They're not like, the bond market and the foreign exchange markets. These are very small markets on a relative basis, and even though they're in the trillions, they're still small. And that literally means that when the doors try to open to try to get out, there's going to probably be a problem. This would be my guess. I'm not sure exactly. I was looking at something that I actually someone asked me a question about it, and that was the market from 2009. And looking at this SDS, and we talked about leverage a little bit yesterday. A gentleman from Yale said there was no leverage in the market. Well, this is the SDS, which is a derivative on a derivative. It's a double short S&P, basically. And as you can see, after the top was made in 2008, you'll notice that the secondary high at 2009, that was the one in March of 2009. It was making a lower high after the Lehman Brothers and Bear Stearns, Bear Stearns didn't go bankrupt. Lehman Brothers did. But after the Lehman Brothers bankrupt and the Bear Stearns fiasco, the market for the SDS just rallied up to the 78% retrace. But look at the price. 2,100 makes it look like Bitcoin. So we'll see. By the way, when we were looking at Bitcoin the other day, we were looking for a price of close to $6,000. We got to 5,900. I don't know if that's going to be enough or not. We're down to 5,300 today. We've dropped quite a bit, and that was basically because of the fact of Jamie. Yes, those. Hold on a second, just a second here. I'll look at the E-mini S&P here in just a second, but we have a 3 drive pattern going on in the E-mini S&P. I don't know if I'm going to be able to post it until after this first break, but the easier one to look at, from my opinion, is the NASDAQ composite. That's the one that looks the most interesting. If you hold on just one second here, I will get this up here so you can look at this. We'll get this up here so you can look at it. This was as of about 2 hours ago, and we're right in this ballpark here. This is the NASDAQ. It looks very similar to the S&P. They all look alike, but you can see from the 10th, we have several A, B, C, D patterns coming in up in this 21 and change level. And, of course, the long-term one in the composite has had a whole bunch of these coming together at the same time, and we're still right in that same zone. So it's up in here somewhere. I don't know where the top is. Hell, I don't know. Oops, that's a bad word. I don't know even if there is a top. Maybe there's never going to be one. This might be one of those times where it's different this time. I've never seen it, but this is why it never means nothing, because there's always something. So this could be the one. It could be, very, very interesting. The bonds are working lower, just like we expected. So keep a close eye on that one. I think we're going to be looking at higher interest rates, without too much trouble. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, so we're going to take a look at the Treasury bonds now. You remember that the area that we were looking at that 154.08 in the DEES bonds was very strong resistance. As we can see, it was making a Gartley at that time. And as you'll notice now, we're trading a handle under that at 153.08, almost at 152. This is a sign that we are heading lower. If we get above that 154.08 level, the whole strategy would change. But the longer-term picture on the bonds and notes, still looks, rather ominous. And I would like to switch gears here just a minute and talk a little bit about technical analysis. I received an email from someone who wasn't very happy with technical analysis. He thought it really didn't mean very much, which I can certainly understand that. But let's just take a look here at the IWM. This is the Russell 2000 going over the past year. Since January, you'll notice that we had a 3 drive to a top pattern there. The reason why I've inserted those ABCD patterns in the upper left there is just to show you how these patterns move. You'll notice the first one on the left in January. We were very bullish on that one. There was a beautiful ABCD pattern there. If you notice the one in March on the 27th, the beautiful ABCD pattern in red, as you can see, that started back at 0.2. Again, the top came in at the ABCD pattern in June. What did we do? We had another ABCD pattern coming down from June and July. It took a whole month to make that ABCD pattern, and it was only a 382. From there, we went up and made a new high, and then we had the big correction all the way down to the 78% level, and then we've gone up and made a new high. And if you'll notice, the new high was made at the exact 1.618 level 2 weeks ago. We've been coming down in the Russell 2000 for 2 weeks, folks. It's made lower lows again yesterday. We've had a couple of, bearish outside days to the downside. So this market is the one that is lagging. If you're looking to short something, look at the Russell 2000, because that's the far weaker of the markets. And you'll notice the gaps that are there. Those will be filled. I'm not sure if it's going to be in my lifetime or not, but there are 3 major gaps. That first one there, the last one that we had, is a gap of only 2 points, and that's when level of 145. So that's very unusual. To say that. So take a look at it. By the way, if you're following the Japanese yen, folks, we're at the major spot right now in the dollar yen. The alerts just went off, and it's a Gartley pattern, and several people have just Skyped me to tell me to take a look at it, which I've already seen the alert go off. But watch this Japanese yen. We're at the moment of truth in that. If I can get that up to show you, I'll try to do it. But I want to finish this chart on the Russell, but pay attention to those ABCD patterns, because that's how the markets move up and down, up and down, up and down, and variations of such. And those where we get the butterflies, the three drive patterns, the Gartleys, and the expanding triangle, the T6 pattern. So those are the things that you'll watch when you're looking at technical analysis, and it's certainly far from perfect, folks. We know that for a fact. It's really interesting. Let me see if I can get this. I've got so many people telling me to sell the Japanese yen that I've got to take a look at it here. Let's just get this up here and see if we can look at it here on a. There we're okay. We're okay. We'll be able to see it here. Just a second here. We're almost there. Just give me a second, and we'll be right here. We got another couple of pips. I think this will show pretty easy. We can certainly show the three drive to a bottom pattern that we had in the Japanese yen. That was an easy one down at that 111 area, and then we've got the Gartley here right now. So we should be able to pop this up and take a look at it, and you'll be able to see. We've got a few more pips to go. We got about looks like about 15 more pips to go for it to be perfect up at that 78% level, but the alerts are going off. So around that 112.95 area is where you'd want to be looking at it from the short side. We're at 112.83 now. We'll most probably get there, given the fact that we've taken, it's taken a whole day to get up there. I don't think it took that trip up there to not make that 78% level, but that's always a possibility. We're going to be opening strong here in the stock market. It looks like the Dow is going to be up 100. Regarding that, if those of you that subscribe to the Elliott Wave newsletter, Mr. Prechter is looking for a top in the Dow Jones around this 23,100 level. And folks, we are within scrambled eggs of that exact price. So kind of keep an eye on that. If you follow Elliott Wave, I'm not an Elliott Wave technician. I basically look at the expansions and contractions of the Fibonacci sequence. I don't count the waves that they usually do because I get in trouble with counting. And mathematics is one of my specialties because the 4 years I was in the 5th grade, I learned how to cipher. Anyway, we'll see what happens with it, but this level of around 23,100 in the Dow Jones is certainly something to be reckoned with. That's what I think is a very important point. We have a question about the Treasury bonds. We've come down very sharply yesterday, folks, from that 154.04 level to 153.04 level where we're trading right now. When the market drops that fast, that's a lot of selling. That's a huge market. That's the largest of all the futures markets that we trade. It's 6 times bigger. Well, let's not say that because the biggest is the Treasury notes, which is 6 times bigger than the Treasury bonds, but it's the most actively traded of any of the thing that we have with the volume. So that's the main thing that you want to be watching. So it's very, very important to do that. So just keep in mind that's my friend Eddie Horowitz on the other line calling from California at 6:30 in the morning, but he's going to have to wait. Anyway, just want to wish him happy anniversary. Anyway, let's keep an eye on these bonds because if you get a little bit of a 382 rally back to this 153.20 level, I would think that would be a pretty good spot, to look at it from the short side if you're inclined, to look at that. So that's the main thing to keep an eye on. Regarding the gold, folks, if you bought the gold at the 1280, just put your stop at 1278. Don't risk more than $2 on it because if it don't work, it is not going to work, and you don't have to worry about it any more than that. That's the bottom line of what we're looking at. So just sort of keep that in mind as you go through the day and watch these things. And we'll have Norm on in just a minute. We have to take a break here pretty soon, but we will have Norm Winsky on in the half hour, and we'll be able to chat with him about some of the things that he's got going on. But the most important thing today, from my perspective, is the fact that the gold has hit that really important level. The euro is holding up, and the bonds are going lower as pretty much we expected. Whether this tops, we got a new moon tomorrow. and that's going to be an interesting one to say the least. And of course, it's the big anniversary date of the October of 1987. And when Norm comes on, he's going to share some of his experiences. I've already shared mine here several times, but it was by far the scariest day. I was making money because I was short the S&P, long gold and long bonds, and yet I didn't think I was going to be able to get the money out of the clearinghouse. That's how bad it was. I mean, the liquidity was just. I'm anxious to hear Norm's war stories because he was in the heat of the battle. He was there at the CBOE on the floor that day. So some of the things he can tell us. We'll have Norm on in just a few minutes. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I think we have Norm Winsky of Astro-trend on the line. Are you there, Norm?
Yes, sir, Larry. Good morning.
Good
Can you hear
morning,
me?
Norm. We have several requests today. Yes, sir. I sure can.
Okay.
We have several requests right off the bat, and that is, would you give us a description of what it was like 28 years ago tomorrow at the CBOE when we were having the crash? Can you
I'd
tell
love
us
to do that,
how
but
it
it's
went?
okay. I'd like to get through my presentation first, make sure we get all the charts presented, Is that okay? Can I do that at the end?
Yeah, I guess so, but you've got lots of requests, so go quickly. I'm
Okay.
sorry, you take your time, Norm. You got great stuff. Fire away.
All right. So I was on your show on October 4th, just ahead of the October 5th full moon, which was in the afternoon. And so I showed these dates. So I had a big grouping, a cluster of planetary cycles, plus the full moon on the afternoon of the 5th. And I emphasized for the full moon, I said often a change in trend for your financials, grains, and precious metals. We had a cluster with two big cycles between Uranus and Neptune, and I said that would be possibly copper, oil, and the stock market. And then we also had, we had something here with the U.S. stocks, T-bonds, and U.S. dollar. I had Mars going aphelion. That's about a 2-year cycle where Mars, as it goes around the sun, is at its farthest point from the sun. And I said, watch for the metals, and it might be gold. Okay, so let's go take a look at the charts and see what happens. So at the top of page 2, I have the copper market here. I was off by 1 day. I think it took off there. I have the green arrow there pointing to the 5th, and which was the full moon. And then it really took off there and off to the races. The copper has been since then. Gold nailed it because I had 2 dates, one for the afternoon of the 5th for the full moon, and then over the at the close 6th was a week. 6th was a Friday, and I had that cycle for the weekend, and so the gold split the difference and made it slow right on the 6th. So there you go. The green arrow there pointing to the 6th. Here's your crude oil. That also nailed it there on the 6th, right there with that green arrow. And here's your soybeans. It was a day early, so it's not this approach. Sorry, it's not perfect. Okay, it's a day early to get your low on the beans, right? And now we're moving ahead. Let's go look at the dollar because I mentioned the U.S. financials such as the dollar and bonds. And there's your right there, nailed the high. And so what's been the high of the month so far for the U.S. dollar index on the 6th, right? And moving ahead here now, I know you've been talking about the euro, so I threw this in. I did not talk about this last time because it was not at the top of my Astro radar list, but I cover about 30 markets in my letter. And if I don't write about it, you can always go to the calendar where I have the almost 30 markets in the letter there. And you can see here's the euro, and here's it was sleeping astrologically. We have, cycles that in general affect most of the markets, like the full moon. Then we have cycles that are specific to that market. So euro has its own cycles too, and it was kind of sleeping on that basis. And then here were my big numbers. I published this at the beginning of the month, and you can see that the big action was right around the 11th to the 13th. Let's go look at the euro chart. There's your full moon low there. So far, the low of the month, and there's your high of the month. So far, was back on the 12th. Okay. So here's your T-bonds. You've been talking about T-bonds, I think, the last several shows. And there's your low there right on the 6th, which is the date I mentioned, right after the full moon. So we're starting to see a pattern here that maybe you might want to watch these full moons and new moons, right, coming up. And that's what we're going to talk about now. I asked to come on your show today because tomorrow is a full moon, and we got a big cluster of planetary activity all surrounding the full moon.
Norm,
Yes,
I hate to correct someone who's perfect, but it's a new moon, not a full moon.
Oh, you're right. Thank you.
See, when we astrologers from Terre Haute, Indiana, have to stick together.
Absolutely. I appreciate that. No, you're right. Tomorrow is a new moon. I apologize profusely. Okay.
Yes.
All right. So tomorrow's a new moon. I didn't get much sleep last night, so I'm probably a little foggy.
What is sleep is overrated.
There you go.
Go ahead, my friend.
I do need my beauty sleep, though. All right, so tonight we have over the next couple of days, we got a big cluster of planetary activity. There you see there on Jupiter, and Jupiter's now in Scorpio. It changes signs about once a year, and we have a whole new grouping now of things: cocoa, coffee, and it's going to line up with Saturn in Sagittarius. So we got the cocoa, coffee, hogs, oats are like a double hit on this, stocks and T-bonds. Then we have, here's one of my top things, is when Mercury, any planet gets to 0 latitude, that's when, as the planets go around the sun, they're like horses on a carousel, in that not only do they go round and around, but they also go up and down. When they get to that midpoint where they're kind of even with the sun's equator, and they hit their highway called the ecliptic, that's 0 latitude, and that tends to be an important change in trend. And for the stock market, this is one of those points that has the potential to invert the polarity of the energy. So if we're having right now, I believe that the market is going up in the face of traditionally astrologically negative energy, and this could change in the next day or two if the polarity gets flipped, and then, right now negative is positive, so so the market's going up fueled by negative energy, but that could all flip like flipping the switch on electromagnetic field, where then negative becomes negative and positive goes back to positive. So if that happens, then we have the potential here for an important top in the market. Okay, and here we go. And there's where's the full moon? Oh, the full moon's tomorrow afternoon at 3:10 p.m. Okay, and here's your...
you have it. You said full moon again, Norm. I'm going to have to correct you.
Sorry about that. I'm fixated on
you do need your beauty sleep. There's no argument about that. But
I appreciate you watching out for me, Larry. New moon tomorrow night, right? New moon tomorrow afternoon at 3:10 p.m. That'll be the new moon. And so you want to watch all these markets that I've talked about here in the last few minutes. Okay, and then we have a big cycle coming up also for the what I call U.S. financials, your stock market, T-bonds, and U.S. dollar into Friday's close. Friday's on into the weekend. We'll also have we have a full moon that's in the sign of Libra, new moon in the sign of Libra. I caught myself, I think, and then we'll also have Mars change signs and enter the sign Libra. So we have a Libran theme here, and so we want to watch the Libra markets, which are sugar and wheat. Here's your sugar chart here coming up for the future, and as of last night, sugar has kind of been in a consolidation after being kind of in a back here previously in kind of a bear market, and now it's kind of getting into kind of a wedgie pattern here. And there's your wheat. I think those patterns look a little bit alike. What do you think, Larry?
Yeah, they look very similar. No question about it.
The sugar chart and the wheat chart. What's that?
Well, they're the soft, so that would probably be the reason. Maybe, I don't know. Hey, we got to take a break, pal.
It sounds like we're taking a break, so I'll tell you the
got to pay some bills
when we come back.
Okay, thanks. Norm Winski of Astro-trend.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks. We're talking with Norm Winsky from Astro-trend. Norm, we were talking sugar and what was it? Sugar and something else. What was it? Do you remember?
Wheat.
Wheat. There you go. Okay, we've got sugar and wheat overlaid. You want to tell us what's going on there?
Yes, sir. Okay. I was informed we had a technical problem, probably caused by me. I forgot to turn on my screen share so the people in the den could see these charts, I guess, So let me just I've
been posting them, so it's not a
Oh,
problem.
all right. All right.
Yeah.
Thanks for backing me up, man. I'm not doing so well today, It helps
No
to get some
problem.
sleep, probably, All right. If you got me covered on that, then I won't bother. Okay. Anyway, here's the
Okay.
sugar and the wheat chart. I fixed it, by the way, and so you should be able to see it now. And there's I looked at these charts. By the way, they're Astro. Notice I said they were both connected to the sign Libra. We have a full moon of Libra. We have Mars entering Libra. And you notice I thought that these chart patterns look a little bit alike. I call these two astro cousins. They're kind of astrologically related. Let's go look at a combined chart. I overlaid one over the other. Let's see, the black is wheat and the blue is sugar. And you can see that kind of interesting,
Yes, sir.
Okay. All right, and moving on ahead here now, we're going to talk about the stock market. One of the things I like to find are markets that are at extreme at the key change in trend windows. Here's, I think, but I don't think too many people will argue that the stock market isn't at some sort of an extreme here. And here's your 10-minute bar. What's that?
That might be the understatement of the year or the decade.
That'd be take a Charles Darrow or somebody to make that argument, right? All right.
Sorry.
Anyway, so here's your 10-minute bar chart as of last night on the S&P 500. There you go. There's your, we're up here. By the way, ask me about what Prechter, the Prechter's number there. I'd already come up with a number like that, and I'll tell you how I do that. I'll tell you that in about 2 minutes or less. Here's your daily. Here's your S&P index daily. Okay, and I think we're up against some resistance levels here, just to maybe a little bit higher, We got, this is just like maybe $4 or $5 higher than the S&P, And there's your daily chart, and there we go. So I'm looking for Larry. So we have, as I mentioned earlier, we have Mercury culminating in a cycle here tonight, and tomorrow's a new moon. Does that ring any bells? We have a Mercury cycle culminating with this is a full moon. This is a new moon. I'll get it straight. This is a new moon. Yeah. And does that bring back any memories?
Yes, it does. May
How about
19th.
Right, May
18th
and 19th.
Yes, sir. I remember it very well.
I came on here and I said, look, Larry, within one day, we have a new moon and Mercury turning retrograde. And I went back and researched that. That was phenomenal. Every one of those in the last 10 years was a big turn in the market. I think all but one were all tops. And that window turned out to be the high of the year for 2015. So anyway, there you go. So I was playing on my calculator the other day, and I came up with the idea, Larry, multiplying the low of 1932, which intraday is 40.56, times the intraday low in December of 1974, which is 570. I don't remember the exact pennies. And guess what I get? You get 21,119.20.
Wow, that's pretty close.
That's right in the Pricker's window there, I guess, right?
Yeah, it's right on the money. You bet it.
There you go. Kind of neat, huh?
Yeah, it's good. Now,
All right,
can you tell us about 1987, Norm? And then at the end of the show, the last 3 minutes, we want to give you a chance to tell the folks what you offer and how they can reach you and stuff. But tell us about.
Okay, here's my personal recollection of 1987. Here's a little background. In the early 80s there, a friend of mine was working for this trader, market maker on the floor there. He was a Chinese-American guy, and he was like a mathematical genius, and he'd walk into the option crowd there and know what every option on the screen should be worth to the 16th and that kind of thing, and he was very good, but he tended to be very aggressive, and he got himself in trouble, and he busted out about 1982. I think it was right around we had a solar eclipse or something, I think around June 22 of 82, and I remember that because copper, silver, gold all made major lows that day, I think, right with the eclipse, and he busted out right then, and so then he went away, and he came back. He'd raised some money and came back in 85, and maybe he had $100,000 stake and got started, and he did very well for a couple of years until 1987, and he was very aggressive, loved to sell options, out of the money options, and it had been in a bull market, and he would sell lots and lots of puts, out of the money puts. Now, here's another factor. Now, as you know, Larry, that on August the 25th, right around August 25th, we had the end of an era on the Mayan calendar. Their civilization got wiped out about 400 years before, but academics and scholars sort of cracked the code of the Mayan calendar and said, oh, look, the Mayans have a big date here for August 25th, 1987, which we had a 5 or 6 planet lineup there, all in like a 0 Virgo, right? And so that turned out to be the high, and then the market kind of went sideways and deteriorated until we got to October and so forth. And so then, meanwhile, I decided, looking at the Mayan convergence, they call that, and the top, and everybody, some of the smarter people that I knew thought we were kind of in a bubble top situation there. I got concerned that it could be another 1929. Now, as you know, Larry, SEAT sold on the New York Stock Exchange at the top in 29 for $550,000. That was a lot of money back then. And I got concerned that, I'd bought the seat at $25,000, the CBOE seat. I paid $25,000 for it while I was still in college. And now my seat was worth over $200K, and I was worried that we could have a generational top, and my seat might drop. In the New York Stock Exchange seat, that thing dropped. The low was in 74. It got to 35,000. It lost over, like 90% of its value. So I had accumulated 2 or 3 different types of memberships. And so I decided to get rid of all my memberships and start making my plans for maybe moving the Sunshine State or getting out of the Chicago weather there. And so I sold all my seats. I had sold the last of the seats right around October 1 of 87. And so I was trading upstairs when this all happened. And then we had then the crash occurred. And I heard that this guy that I knew because my friend had worked for him, his name was Wall-In. I just ran across an article about him on the Google there, and Wall-In Lee is his name. And so they said that he had run his account up to, I don't know, maybe $10 million or more from his $50K the 2 years before, And wow. But he sold massive amounts of puts all over the floor there, and when the market crashed, Wall-In Lee disappeared. So when the dust all settled, he was trading through First Options, was the largest clearing firm on the CBOE floor there. And they were owned by, the Continental Bank had bought from Spear Leeds, had bought the First Options from Spear Leeds back in like 84 in the early 80s. And then the Continental Bank got in trouble, and they ended up getting owned by the government. And so, So anyway,
Bad time.
he ended up being about half of the total loss. First Options ended up with over $100 million loss. That almost took the whole CPOE down. That down under, probably everything went down under.
Got to pay a few bills. We'll be right back with Norm Winsky of Astro-trend.
Yep.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, with Norm Winsky from Astro-trend. Norm, I want to thank you for coming on again. You give us some great information. You want to tell the folks what you offer and how they can reach you? Because I know some of the people that might have an interest in Astro harmonics might want to contact you. So why don't you tell us how we can reach you?
That'd be great. Okay, I have every month I have about maybe 6 people I help with a free individual class, individualized on Skype, and they get the current letter and a 5 to 6 hour class, and I go through my letter and show them the different methodologies I use, and I try to teach them how they can, the old Chinese proverb, catch a fish for a man, he'll eat for a day, and teach a man how to fish, and he'll eat for a lifetime. I try to show the people how they can catch their own fish and eat for a lifetime, hopefully, And yes, so sir. You can contact me you can call me on my phone. I'm in Florida at 239-594-3939. Email is a great way to catch me. Nwinsky, that's Nwinski, at embarkmail.com, or you can call me on Skype at norm.winsky. And I only can do this for about 6 to 8 people a month. And so call me right away, and we'll get you in line. The next one's coming up in, I think, right at the end of October there. Oh, by the way, speaking of the end of October, I'm probably won't. I don't know if I'll be on your show in time for Halloween trick or treat, Larry. But it'll be my third. I started this letter 39 years ago. I was on the floor, and a couple of the traders asked me if I would be willing to share my market timing because they'd watched me trade, and they were impressed with my market timing. I was doing intraday stuff then, and they were impressed with. I was catching turns like within a minute or two, and they were impressed and asked me if I'd be willing to share my information with them. And I started doing it I didn't never intended to start a market letter, and so one day I come into and give the timing to one of my clients, and it was a busy day, and I gave him 4 or 5 times, and he said I can't remember all that. Write it down, and the letter was born. I had to start writing it down.
Well, congratulations. We'll have you on the birthday. Remind me, okay?
Okay. Thanks a lot. Looking forward to helping some of your folks.
Okay, thanks.
Call me right away. Thanks, bye.
To Norm Winski of Astro-trend, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.